Happy Friday, everyone. It is the 7th of May, 2021. Hope everybody's first week of May has gone well for them. Taking a look at Bitcoin. We just got done looking at our Cardano pair. Okay, same thing. There's a lot of bullish activity here at these highs, but man, especially right here. I'm going to keep reiterating this is that we've had fail, a failed return higher above this prior bear flag. And then we have this bull flag pattern that we dropped down below. Okay, I'm on the 4-hour chart right now, and it's about 20 minutes to 8 on Friday evening Eastern Standard Time. So we had price drop out on the 4th, and it came down, failed to break out above, and then you look at today, it tried to go higher again, and it failed to break into that prior channel. Now, this is the setup that makes me a little leery in the short term. So we have this trend line, and then we have this trend line. We have a very ugly looking rising wedge following several rejections of prior bearish continuation patterns. We're not seeing a full sell off yet. I mean, we had an inverse head and shoulders pattern here that failed to produce. So I'm worried that there's a lot of trapped bulls in here. And if that is true, when this does drop, it's going to sting a lot of people. Specifically, a watch for a drop below basically 55,000. Because that will break this current structure here on the 4-hour chart and push prices down lower, possibly breaking down below 50K and possibly to our level that we've looked at before at 38K. This isn't a very great zone that we have ahead of us. There's just not a whole heck of a lot of supportive structure in here. I think we just need to be very, very careful about being overly bullish, even though, I mean, listen, this is cryptocurrencies. I like to give both sides of this. I don't think I really have to explain a lot of reasons why we should be bullish. Because there's a ton of reasons to be bullish. There's a ton of reasons to be looking only at the upside of this market. But that doesn't do us any good if we don't look at what's happening on the other side of the market, okay? It's very easy to get on the interstate and have tunnel vision and just keep going and not realizing that there's danger up ahead, not realizing that you should have turned around. That's what we have going on right now. It's very likely that a lot of this kind of congestion and failed breakouts higher is temporary. As we transition into the weekend, it's going to be a lot easier for well-capitalized individuals and well-capitalized institutions to move this market. So it's going to be easy to move it one way or the other. And I think the move that's going to sting the most people and hurt the most people is definitely a move to the downside. So watch for that. Watch for a drop below 55K and below 50K. And I've got buy limit orders sitting at 38K. It'd be cool if it hit there. If it doesn't, who knows? Also, a big drop like this to pick up some buyers just to like do a V-shaped recovery and shoot us higher. That's likely to. I mean, I know some people don't like having analysis that share both sides of the market, but that's the dangers of having a single bias. So it's good to look at both. I would rather show both and have a warning about one versus the other and have a reason to look at both than just a single direction always up and failing to see the risks that we have on the downside. So just keep that in mind. I think that does it for today. Breakout wise, the 65K areas really the only place I'd look at going long, but only after there was a pullback to retest it as a break. Otherwise, you just I gotta wait. I would love to see prices drop to get in earlier at a cheaper price, but we'll see what happens. That does it for me, folks. Have a great weekend. From all of us here at Exchange Rates UK TV, thank you for watching. Please don't forget to like and subscribe.